what, about 2.5 years? Is that your whole time in the insurance industry? Did you start with FFL or with someone before?
Hey, you kind of broke up there because I just got a phone call from a client. They were probably trying to cancel, so I ignored it. if you can repeat that question, I didn't hear it. Sorry about that.
No worries. I was saying you've been with FFL for about 2.5 years. Is that your whole time in the insurance industry?
Yeah, that's it. That's the only
Nice.
time. No sales background, no insurance background whatsoever.
Sure. That's awesome. And so what was that? So kind of delving right in as far as your learning curve. So obviously you're with FFL. You had about a year with us before you hit Hall of Fame, 6 months a year.
Mm-hmm.
And then, so what'd you do that first year? How was that learning process? Buying leads, going out, helping clients. What things did you learn getting started?
First off, I'd like to say that I could have flattened it if I would have decided to buy more leads quicker. I kind of tiptoed around it because of my family.
Sure.
I don't know if I fully trusted the process, and I can tell you this: it was a mistake. It was a mistake that I did that. I wish I would have jumped right in.
Sure.
I bought less leads. I started out part-time, which is okay. That's just my path. But anybody that I'm talking to, I'm like, hey, you need to flatten the learning curve for everybody or for yourself. And the best way to do that is to get through those first 100 appointments and get as many leads as you possibly can in your hands. I don't care what kind of lead it is, because you're going through reps. You're going through reps, whether you close them or whether you don't close them. And I've realized that, I still learn stuff inside the home. But there's a lot that I took out of the home: learning medications, learning a little bit of body language, learning how to speak, learning how to do multiple things at once, go through the e-application while you're still engaging with the client. Was really a learning curve for me. So that's a little bit of what I did, but I started out with Facebook leads.
Okay.
Yeah, initially that's what I started on.
So it sounds like what you're saying is that first year wasn't so much the sales process that you wish you had learned sooner, or the different products, and even say anything about that. Sounds like the only thing that you feel like was holding you back was that you just didn't have enough leads and you weren't working enough. And so it kind of sounds like everything else comes with it. You're like, if I had done that, I would have been in more houses. I would have learned the products quicker, the sales process faster. That would have helped everything if you had just done those two things.
Yeah, 100%. 100%.
So started with final expense. And now I know right now we're going to spend a little bit of time today. And I think you were, when Ivan called you and talked to you about it, you were just in one appointment is kind of what he was saying. I know, and a lot of second chance, mortgage leads, obviously a ton, hundreds of thousands just hit our CRM. And myself, I'll just give you some background on me. For this first 6 months, all I was working when I started with FFL was Facebook and Second Chance Mortgage. And I loved Second Chance Mortgage so much. This is not an exaggeration. I actually have a new guy I'm training today with me. I was telling him, I was like, my ROI was so good, it actually held me back from buying fresh mortgage leads. Because I was like, why would I spend all that money on fresh leads? Because I'm doing so well with the Second Chance. So since you were just, doing that, talk to us a little bit about that lead type, how you incorporate. Obviously, you're running mortgage on a fairly regular basis.
Right. I do. I have every single possible lead that we can get. I buy instance. I buy 1 month, 3 month internet leads. I get retros. I have direct mail mortgage, BPL mortgage. I have Second Chance Mortgage that I buy. There's 900 that just came into Albuquerque the other day. I bought 600. I bought 600 of those like this.
Nice.
Because I know I can make it up in one home.
Oh,
yeah. You can level up in one home. You can bring back your investment after one home. It's not,
Right.
it's not that big of a deal. It's
And then it's
1,200
all,
bucks.
and then it's all profit. Yeah.
Yeah, it's all profit. You know, that was a learning curve for me too, also, Gabe. Realizing that comes back. It comes back to me. I was worried about my bills and how I was going to pay my family and do all these things. But I wasn't looking far enough out yet. But do I approach it? I bought 600 of those, and I'm still
Nice.
calling them. I was in LA with the Dream Center out there doing the Kicks for Kids this past week, so I've been
Awesome.
having to call in between and do that as well. But what I can say about the lead is, number one, it's a lead. So the quality of it to me is just, it's a lead.
Right.
I've had people that and I've realized that over time, it's just a lead, man. It's just somebody that I can get out to. If I can't get them on the phone, I'm door knocking them.
Well, it's just like you said a second ago, you know, you're spending, you know, you buy 100 of those leads, you spent $250. You know, I think they're $250 a piece right now. The average mortgage sale is around 1,200 AP. So literally, I mean, sometimes we have to really kind of kick ourselves to think right, because we're like, oh, I bought 100 leads and like half of them hung up on me. You know, other ones said they didn't want it. I only booked, you know, 16 appointments or 10 appointments or whatever. Well, here's the thing. You go out and sell one, you're immediately profitable. You know, you paid for all of those leads and you put $1,000 almost in your bank. And then literally anything you make at that point is complete profit. So just like you said, it's a lead, it's not a sale, but we got to look at it right. Because if I buy 100 and I sell 2, well, that was very worth it. Because, you know, I just put a couple grand in my pocket. So why not?
Absolutely. Hey, Gabe, a couple of the objections that I've seen and I've heard, I don't think they're like any different than any of the other mortgage protection objections. I've already refinanced, is what I've been getting. I wrote them down here, so excuse me while I look down. You know, and that's fine. It's just all I do is just I rebuttal it and I say, hey, that's fine. It's not from your lender. It has nothing to do with them. This is just in regard if you get disabled, if you're unemployed, or in the event of your death. It's just my job to get you the information. I don't think it's that deep. Anytime that I have a rebuttal or I have an objection, I think I get 6 or 7 sometimes on the phone, and then I get 6 or 7 in the home. But you just bump over them.
Right.
You minimize it and bump over it. That's all I've ever done. Is I don't want to say I ignore it. I acknowledge it. I mean, I don't, you know what I mean? I don't know if that makes sense, but.
No, it makes sense.
Okay.
And yeah, this is one I've gotten quite a bit. And I found myself in the position where I booked the appointment, you know, and I'm going out to run it. I get there to the door and they're like, what is this? You know, again. And I know my normal bill is, what is yours when you're getting that confusion at the door where they're like, when did I fill this out? What is this? You know, I don't remember this.
I just show them the lead and I actually start walking in the house. That's what I do. I just start walking out in the house. I'm like, hey, do you have a table that we can sit at? You know, it takes 10, 15 minutes. I treat it as a door. I almost treat it as a door knock in a way. I'm like, hey, this is for when you die. It's going to help pay off the home. You know, immediately. Like, that's it.
Yeah. So you just make it super simple, super assumptive. Yeah. Show them the lead. Yeah, that's good. Yeah, same thing. Because I mean, and that's the great thing about these leads, right? Is it can't be disputed. Like, I mean, like, unless someone's gonna get silly, like, is that not your handwriting? They're like, oh, that is my handwriting.
I had a guy that took me around the corner once with it, and he had to like grab his magnifying glass, and I'm like, dude, what are you doing? Like, you filled this out, man. I'm like, I didn't. Like, like nobody did. You did.
Right. Yeah, that's so funny. Yeah, I think once or twice I've only had someone who really, I mean, I remember I had one guy who was like, that is my handwriting, but I didn't fill it out. I was like, so someone filled it out with your handwriting and put it in the thing. And so we still had the meeting. I was like, well, I got to get this information out to you. So let's just go over it. And so we're very good. And then what is your process at that point when you get in the house? Do you treat it just like it was a fresh mortgage lead? Do you hit it with from a little different angle? What do you do?
No, the same way in the home. 60 seconds about who I am. So how I introduce myself on this call is how I introduce myself in the home, and that's it.
Okay.
That is literally it. I might say I have 2 girls and 2 boys. You know, their ages are 12 and under. You know, and I do that. And I say I'm local here in New Mexico. I live in Taylor Ranch. It's a part of Albuquerque. But I typically say, hey man, listen, Bob, there's 2 reasons why people fill out a form like this. You don't have any coverage in the event of your death, or you have some and you need more. And I'm going to safely assume that you're trying to protect your kids, your grandkids, or your spouse. Which one of those do you fall into?
Okay.
And what I've learned, Gabe, I hope that makes sense to y'all. But
Sure.
but that's how I break into it. That's how I tap.
Okay.
That's how I tap the ice.
Sure. Sure.
But what I've learned too, Gabe, is that Alexander the Great, man, he was asked, how he took over the world, right? And he was unwavering. Being unwavering in the home is what we have to be. We can't waver in the home at all. You have to be intentional with every move that you're making. You can't be shaken at all by people's objections within the hope. But what I've come to learn is that sometimes we're the last link between their hope and their hope for what's going to happen. Sometimes a lot of people I meet with, man, we're the last link to their hope. Like we're giving their family hope that they're going to be okay. So I show a lot of compassion. I'm passionate about showing hope and compassion in the home for family, and being humble on the phone, telling them, hey, my job's to make sure that number 1, you can qualify medically, and number 2, that you can afford this. Because if you can't afford it now, you're not going to be able to afford it at Christmas, and then you're not going to have coverage. And I want to make sure that I can put you in a position where your family's adequately protected.
Right.
These are all things that I use in the home.
Sure. That's great. Now, something I find common with a lot of Hall of Famers is we typically see that you are taking objections that you're going to get and you're knocking them out beforehand. So obviously different types of appointments, obviously there are objections that are typical for every single appointment, and then there are ones that are a little unique to the ones that you're going to. And I would say mortgage has some of those. What are some of your common objections that you're getting when you're trying to get to the close, and how are you dealing with those beforehand and then maybe at that point? What's your strategy?
If I've been in the home for over 10 minutes, that's probably a little bit too long, and I'm not going to fool around too much longer than that. I've just come to a conclusion that that's about the time frame. And so after I've mentioned that, what I've said in the home, what I've already told y'all, I say, hey, listen, so there's no blood work today. My job is to make sure you get qualified, you can afford it. And how we go about that, Gabe, is we submit a request to coverage. What that's consistent with is your name, your date of birth, phone number, street address, email address, place of birth, 15 health questions, your beneficiaries, a primary and a contingent, and your banking information, checking and routing. Once we've come to a point where we've agreed on a couple options that you you like, we submit this request, and that's it. You'll be covered today. to protect your family. And that's how I do it. And I always say, hey, does that make sense? And they either agree to it or they don't.
Okay.
But the last part, I'm sorry, Gabe, I forgot about that. We submit the application also with your checking and your routing number, which is at the end of the Americo app. So I want to make sure that they know that we're going to be submitting a request with all that information on it.
Sure. So you go right for the jugular at the very beginning. You are going to pull out within the first couple minutes, whether or not you're sitting with someone that is ready to buy or someone that is going to tell you no. Like you're pulling it out right there. And then if you get an objection at that point, like, oh, my checking and routing, or do we have to do something today or something like that? How are you dealing with that? Are you just packing up and going, or do you have some rebuttals that you think there still might be a sale there and you're gonna kind of pull it out?
I have done that. I've stuck in the good fight for people. I won't always leave. I will stay there if I know that it's going to come. If it's going to work, I'll explain it and work with them. I don't always pack up my stuff, so I should kind of clarify that. I don't always, because sometimes I've realized with people and working with families,
Sure.
Sometimes the process doesn't go that fast.
Sure.
But sometimes I don't have them hook, line, and sinker either.
Sure.
So I got to spend a little bit more time explaining things that, there's no modified waiting period for this coverage. It's day one. But I also start the process as well with them going through the e-app already. So I already have information showing them that they're already qualified prescription-wise for day one coverage. It's helped me. But with overcoming objections, if it really gets down to it, sometimes at the end, we don't like that objection where people are like, hey, when does this start? And so in the beginning, I say, hey, listen, this is going to draft your bank account in the next 48 hours. So you have effective coverage immediately.
Right. So you're pulling it out right there. You're identifying buyers. And you said you don't always pack up if they give you some pushback, but what are those telltale signs? Because obviously you're very quick in the home. You're there to protect their family. You're figuring this out quick. What are those times where you will pack up right away? And what are those signs that you're saying, like, okay, I feel like this is one of those that's going to take a little bit more? Like, what are those signs for you?
What happens, Gabe, is that when you show the prices, if I can get somebody to put their name and their date and initial it on there, they're good. If they don't do that and they want to pull back and they don't want to they're not going to do it, or they want to talk it over with their kid, or those are really signs right there. I need to talk this over with my kid and think about it. You can always roll with the whole, you have 30 days to figure out whether or not you like this or not.
Right.
But I also don't want to charge back to come either.
Right. You're kind of setting yourself up with that kind of close.
Yeah. So I don't roll that way, but those are a couple of things that I really don't know. But I'm really just looking at body language, Gabe. Like, are they really wanting to protect their family today? And that's it. Otherwise, I will get up. If they've looked at the price and asked for the company information and they want to know what the cash value is going to be, those are all, kind of like pushback signs that I'm getting. Hopefully that helps a little bit for y'all.
Yeah. No, you're getting some tire kickers. So, all right. So going past that, going to more of the basics, because obviously your focus as a producer, you said it right there at the beginning. If I had bought more leads, been full-time, ran more appointments. So, Will, if someone wants to be like you, they want to be a Hall of Fame producer, talk to us about your lead flow. Obviously, you buy everything. What do you spend in a week on leads? How many appointments are you running? Do you follow the FFL structure called Monday, Thursday so talk to us about your week. How is it set up?
Recently, I've been trying to build my agency, and I'm signing on a lease actually tomorrow here in Albuquerque. So I'm really excited for the office. Going to give me a little bit more structure. Thanks, man. I really appreciate that. I've been praying on it a lot. and I'm moving forward with it.
That's
But
awesome.
thanks, man. But I did last year, absolutely. This year's been a little slower for me, but I'm super excited about that, man. It's like about the office. Like last year, I dialed my car. But yes, 20 to 30 appointments. I'm spending about $2,000 a week on leads. It's been a little bit
Okay.
like this, so I've had to supplement, like I said, with the instance internet leads. I have done the occasional travel trip. So if you guys aren't doing that, absolutely reach into that.
Sure.
And take a leap of faith. And it'll work out. If you're working the numbers, if you're door knocking, you will absolutely, these numbers will work out. But lead flow, if you're not getting anywhere from 100 to 150 new leads a week,
Yeah.
it's going to be tough.
Sure.
If you're only working instant or internet leads, you have to be getting that many a week.
Right. So obviously your flow is a lot, because obviously we know, mailer leads, whether they be mortgage or final expenses, they're going to be a little bit higher intent, if you're getting them fresh. But, if you're, like you said, if you're getting those other lead types, whether those be second chance, like we were talking about mortgage mailers, internet, Facebook, you're really going to need to work the numbers. And so
Yep.
about $2,000 a week lead spend, what are you typically writing?
Oh, you can do 10 grand.
So
Yeah.
$2,000 a weekend to write 10 grand. I think those numbers work for most people.
Yeah. I mean, I've had my weeks. I think my best week was like 24 grand, 24
Nice.
grand in a week. I might have spent 2,500 that week, but I had some big premiums come out.
Sure.
You can get up into the 300 or 400 range. You can do that. I don't always get that, but the thing is when you have enough leads and you work those leads, the numbers always work out. As cliche as that sounds for what we do, it's the truth.
Sure.
Because I've tried doing it every other way, and it the numbers always work. You do 10 appointments, you're going to get with the results of 10 appointments.
Yeah.
And it might not always be good. You might not always hit that. But you do 25, 30, I know when I'm in a home, I can get up and walk away. Because otherwise I'm stressed and I'm staying there 20, 30, 45 minutes trying to get them to get the coverage, and then they're going to cancel it anyways, and then you're going to have a chargeback. So when I got 25, 30, hey, Miss Smith, it doesn't seem like it's going to work out. But I wish you the best, stay blessed out there. I wish you the best. But it's just not working out,
Yeah.
Goes,
yeah.
That's what happened. That's it, man. Go ahead. Sorry.
I was going to say, I field train a lot of agents, and I think sometimes they get shocked how quick I leave an appointment. Like I'm definitely not trying to be rude. Like this is like I said, like, hey, God bless you, have a great rest of your day. But once I find out that this is no longer going to be productive, I'm on to the next one. I'm just working the numbers. And so hey, I want to be respectful of your time. I know you're busy today. I want to wrap up the end of our call here with, obviously now you're focusing on building an agency. You're taking a big leap here, getting an office, which is super exciting. So talk to us real quick. So for one, where are you now in your agency building, and what's been your experience thus far?
Just as an agency builder, invest back into your business. Write 40, 50 grand a month. Take care of your family. Invest in the business if you really want this thing to grow.
Sure.
I have definitely been humbled by the business in all aspects. But you can also be blinded by the business and get complacent. You can be blinded by yourself, is what I mean. You can limit yourself to this business, and you don't want to do that.
Sure.
There's a system in place for us. Everybody talks about it, and help people out, because there was one point in time, man, like I was backed up against the wall, man. I had to pay my bills. I didn't know what I was going to do. I had to pay rent, and I stumbled across FFL. There's other people out there. You know, get on the platforms, get on Career Builder, get on Facebook, get on TikTok. All these agency builders that are moving. You know, Steven, I work with Steven Yee, and he's been a huge blessing in my life. Him and I talk often. I got a guy on my team, Colton. I would hope that he can get on this call too and give you all a little bit more information. He's building massively in the business.
That's awesome.
But I'm getting the office for a little bit more structure for my business. Number one, you know, to ignite that and blast off with the business, but invest back into it. You know, get on these platforms for hiring. We got a ton of free platforms that are free. You know, get on them.
Right. Yeah, 100%. So wrapping it up, because we're obviously somewhere down the line, we're going to talk in the future, and I want to know where you're going to be at. Where are you now in your agency building? What's your goal for the end of the year? We got about 6 months left in 2021. Where are we going to be in January when you get to convention?
I'm at 150. I'm going to say 600. I'm going to say 600. I guess I'll play it safe. If I was on stage with Sean, I'd probably have to say 1 million. But you know, I'll say
you would have to. It'd hit you. Yeah.
I'll say 600.
I think you're going to hit it. You're going to, you know, that we all hear the same thing. That first 300, you know, it's the biggest pain. You know, it's that's going to be the hardest work. But once you build that momentum, then it starts taking off. So the help that you got, obviously with Steven, that's a phenomenal guy. Everybody loves him. And so I think you'll be there. Well,
I may jump on real quick. I'm having a little bit of success with those. One thing that I've been doing is I've been saying that if they say they already have a policy, which is one of the rebuttals that I'm getting, is, hey, I'm here. I'm just gonna do a quick policy review for you and make sure that you are in good hands, that you have good coverage. Because it's happened a couple of times that they have a policy that is just terrible. And I show them, I've called the company and we showed them, and I explained to them, and they're like, yeah, we'll change it and we'll do something. Worst case scenario, 10, 15 minutes reviewing the policy. If it works, good. If it doesn't work, good. But if it works, you got, $1,200, $1,300 in your pocket.
Yeah, that's great advice, man. It is really crazy how many people have horrible policies, and it's also crazy how little people will typically know about their own policies. Like, I don't know how many people have told me, like, oh yeah, I have $200,000 whole life permanent coverage, and you get it out and it's a $50,000 term that's increasing every few years. And they had no idea, like, oh, I thought I had 200, and it, like, no, this is and in 2 years from now it's going to be 300 a month. Is that okay? They're like, well, no. So no, good advice. Then anyone else, anything to add, or any questions specifically about the second chance leads?
Yeah, I have a question kind of in regards to the products. The way I usually do it for like final expense, let's say, is I've kind of worked it from, like, if they don't get approved with America, you bounce over to Moo, and then maybe over to Prosperity. How would that look like in terms of the products for mortgage protection?
Sure. So it depends who you're sitting with and an idea of what they may qualify for. So for instance, when you're sitting with people 20s, 30s, 40s, 50s, majority of the time you're trying to focus on products with living benefits. So, that's the big kind of sales for the mortgage protection, because you'll have people, you'll sit with them and they're going to be like, oh, like, I already have life insurance. And so when I get that, I'll be like, oh yeah, no, I assume that you did. And like the difference between this life insurance is only going to pay when you pass away. And more like, if I feel like they're pretty healthy and I feel like they would most likely qualify for something with living benefits. I would like the difference between that and mortgage protection is I'm also covering you for those critical and chronic illnesses. So if you get, very bad heart attack, stroke, you get a chronic illness, you get cancer, you get in a very severe accident and you can't perform 2 out of 6 living activities like, feeding yourself, clothing yourself, bathing yourself, these living benefits will pay out. So if I'm covering you for the amount of your home, especially if you're sitting in a situation where there's one defined homeowner, like many times there'll be a situation where the husband is bringing home, he's working full time and there might be a stay-at-home mom. So everything is on that guy. And that's just, so because you're going so strong living benefits, America is obviously still our number one because they'll do 100% for the critical and chronic. Their HMS product is phenomenal, especially if you have an opportunity to sell that CBO. It just makes so much sense. Get coverage for all your working years. And if that person is in their 30s, they're going to get coverage for all their working years and then get all that money back at the end. So it makes so much sense. So from there to Moo, TLE, Foresters, Term has living benefits. Ovid Home Protector is kind of our Hail Mary, if, they are getting denied with everyone else and you maybe don't even know why, maybe something's showing up, on one of these consumer reports, America checks like 6 and they don't know it. I don't know. Maybe a doctor put it on their record and they didn't even know. AM is a good shot, because I think they only check once. So if there's something and you and the customer are answering honestly and you don't know what could be on their record that can deny it, AM is a good shot. But then if you're in a situation that's 60 and plus, most times you're not focusing on the living benefits. Sometimes you are, but obviously then you're using a whole life product to do like equity protection, cover 12 months of the mortgage payment. And then you're similar to final expense, so a lot of those, Prosperity, Aetna, going to those. Eagle is still, through America, is still a phenomenal option because they're so lenient in their underwriting. I just covered a guy the other day, had a stroke 2 years ago, and since America only knocks it out if you had it within 12 months, so still a real good product.
One of the things that Ivan taught me was not to oversell. Like if you have a little bit of an older person on those living benefits, which is a great thing, but like get them qualified first, but don't oversell them because then you're gonna have to retract back and then potentially go into a whole life. So obviously talk to your manager before you run it, so they can give you that help. But yeah, don't like try to oversell it. Say, hey, yeah, we're gonna get this, and then once they get qualified, oh man, we got icing on the cake. You're gonna get a living benefits. You're gonna get terminal, critical, and chronic illness or whatever the benefit is.
Yeah, that's great advice. You don't want to shoot yourself in the foot and promise something that that you can't give. And usually the way I kind of save myself from that, Jorge, I don't remember where I heard this, is I'll tell them mortgage protection is dual purpose. I was like, during your working years, we're trying to protect your income. And during your retirement years, we're trying to make up for that loss of benefits upon passing away. Because most of the time, the senior citizens that are qualifying for mortgage protection are the people who are still actively working. Our health is just better. So that's helped me as well to make that focus. But no, that's great advice. Any more questions? We got time for one, maybe 2 more questions.
I want to jump in real quick, guys, and I guess help you with understanding and setting realistic expectation for all the second chance mortgage leads that we're all about to hit hard tomorrow. Is that you probably, if you dial very persistently, you're probably going to get 60% of the people on the phone. And your goal is to really just book 1 out of 5, 1 out of 6. So I think it's very reasonable expectation. But to a lot of you that I talk to, you saying you buying 200-300 leads, because at the end of the day, they cost $2.50 for a reason. Lead is a lead. When somebody says lead is a lead, that means you're going to have to really work them. It's going to be a dogfight on the phone, right? But what it's not going to be in the home, like Will said earlier, it's going to be like normal appointment. So your job is to go and get as many of them on the phone as possible and handle them well. So what does it mean handling well this second chance mortgage lead on the phone? Is by telling them, acknowledging whatever they throw you away, because they definitely going to throw something your way. Either I don't remember, or I already took care of that, or I'm no longer interested. So with that said, you got to be prepared. So your gun has to be loaded. So you don't have a second to think. And when you're handling this objections, it's almost like you're almost interrupting. You're listening almost to the end, and then you right there. You don't let them say another word, and you're acknowledging that, you handling this, and you asking them a question. Right? Very simple. But the main idea is this. A lot of these leads that were either serviced improperly, they gotten something just to make a sale. I've seen way too many cases, way too many people I sat with that sat with somebody else before they offered them 60, 70, $80 a month for a regular 15-year term, where I was able to replace that with $250 a month. Just know that a lot of these people, and you, like, there's nobody else that's better than you to service these clients. And if you don't have that confidence yet, it doesn't matter. You go in there knowing that we have your back. All you need to do is just reach out and run a scenario before you offer anything, and we'll give you the play. We'll give you the play. And with as many people, myself, Gabe, Jorge, Justin, and all the managers sat with, it's impossible that we didn't deal with the same situation, and we, in 99% of the situation, we can put the client in a better position. But the way we handle this objection is very simple. Before, actually, people that say, I don't remember filling this out, that objection doesn't even exist for me, because when I attack second chance mortgage leads, first of all, you dial a lot more than you dial any other lead to get this people on the phone. And essentially, the script sounds exactly like this. John, yes, John, this is Ivan getting back with you. It's about a form you filled out some time ago. I don't even know if you would remember. It was right around the time you closed on your loan. I'm a supervisor here doing an audit today. Looks like we never got this information out to you. My job's simple, just to verify information, get the rest of it out to you. What time do you get off from work tomorrow? Right? And if you said, what? I don't remember filling this out. Perfect. As I said, I don't expect you to. I forgot what I ate this morning. What time do you get off from work? If they tell you, I already took care of that. Perfect. That's exactly what I'm calling. You took care of that. It means you have a policy in the drawer, or are you still thinking about that expensive premium that was offered to you? That's one of the ways to handle that. And second way to handle, I already took care of that. Perfect. That's exactly what I'm calling. Many people have said the same thing. After a meeting with me, they found that they overpaying for their insurance policy. With that in mind, are you retired or still working? Right? So if they give you, I'm no longer interested, I'm no longer in the market, that's not as clear how to handle that, but you gotta have the clarifying question there. Perfect, John, did you take care of it and you have a policy already, or are you still thinking about it? Same thing, right? So pretty much the same way, but whatever they throw you away, perfect, that's exactly why I'm calling. Our records indicate nobody got out to you. You might have talked to somebody else. We are brokerage representing 25 plus carriers. 99% of the clients we meet with finding out that there's better options out there. Or there's a variety of different rebuttals. So you can say, oh yeah, as you said, it was some time ago. I'm bringing 2021 information to you. The rates have just updated recently, and they have every single person, and what time to get off from work, or just, whatever. You can slice it up many different ways, but the main idea is something you have to be clear about, that you're not there to negotiate. You're there to tell them, I am coming over. You have to bulldoze your way with a second chance mortgage lead. Again, you're working brand new mortgage lead flow. I don't know any people that's doing that, because obviously there's not enough mortgages to be financed to work that kind of lead flow. Then you don't have to be that guy. But with second chance mortgage leads, you getting your way in, you trying to flip that 250 from 100 leads and literally 2 sales. I think it's very reasonable for anybody and everybody to sell 2, but just expect this. Expect a dog fight on the phone. Expect people to be really nice to in the home when you're there, but it's $50 an hour for 8-hour day, you know, like there's no secret here. I'm pretty sure if you've been around on this calls enough, you understand. Will Lohr, regular guy, right? So hitting Hall of Fame. Why? Well, he told you why. So I'm not going to waste your time on that. But anyways,
Yeah,
I guess
I love it.
anybody have one more question? We have time for one more.
I have
Go
one
ahead,
more. I have a question.
Go ahead.
Okay, what do you define as what's the thin line between replacement, or how do you define replacement? Like when we're saving them money, or for example, if that's our selling point, or giving them more options.
Replacement is anytime you're replacing one policy with another policy. That's the replacement rate.
Right. But then there's stipulations and laws against that. So I just want to know what.
If you're putting a client in a better position and the client agrees with you, that's the legal replacement. You know, if you forcing client to cancel policy that's less expensive, that's basically in their best interest to keep. That's illegal. So I mean, there's no. I don't think there's any gray area there. So at least that's the way I see it. So if you
agree,
if you see somebody at age 70 with a 5-year term at $50,000 in coverage, I think that's easily replaceable. You know, if you see somebody with accidental plan at age 75, it's replaceable. You know, if you see somebody in the graded policy that shouldn't be in the graded policy, that's easily replaceable. So I hope that makes sense.
Yeah, it does. I just wanted to be clear because it is a question that is on the application, and it is something that you have to walk carefully because sometimes you may have agents that may overstep that boundary. So I just want to be clear.
Got it. Fair enough. Gabe, you were gonna wrap it up, huh?
Yeah, I was just gonna say I loved what you said about you know, sometimes Ivan, people putting them in an inferior product and just have an opportunity to give someone something way better. I remember pointedly, I walked side with a lady, filled out multiple lead cards, and she had sat with someone before me from another IMO, and just had gotten a term policy. She was young to cover a mortgage for 30 years. And I was like, hey, this is a good policy, nothing wrong with it. But is there any reason you didn't get living benefits and you didn't get cash back? And she was like, I had no idea that was even an option. And I was like, yeah, so I showed her living benefits, cash back. It was twice the price, but it was far superior coverage. And she was like, why? Of course. She's like, I don't know why that other guy didn't show me this. This is what I want, you know? And so you'll get great opportunities to really help people. So don't be intimidated. And that was a lady who told me I already got it taken care of. And I was like, well, hey, I'll take a look, and in 5 minutes, if I can't show you something better, I'll be out of there.
Yeah, 100%. And that's exactly how do you find this opportunities by, you know, in the way pushing on the phone, right? So just if somebody tells you, oh yeah, we all set. Well, perfect. You know, I hear that a lot. Here's my process. I'm a broker. I have 25 carriers. I'll come prepared. I'm not going to take a lot of your time. 10 minutes. We're going to quickly find out if I can put you in the better position or not. Obviously, the decision's yours, but I'm not going to waste your time. I have another 20 clients to see tomorrow. Anyways, are you retired or still working, right? And then that's how you really find them. But that's great, Gabe. I mean, I've dealt with that a lot where, you know, you walking in and they're like, yeah, you know, we just didn't see really, you know, we weren't offered the option, or we didn't see how we should be spending more money. But you show them living benefits and cash back, it's a wrap. You know.
Yeah. And those are tools we have in our pockets that a lot of other IMOs don't. You know, they don't have, maybe they're not with Americo, maybe they're not focused, maybe some of the carriers, they're just, for whatever reason, not focusing on their living benefits. They haven't been taught the value. And so Family First Life is out there crushing it with this just really good coverage, you know, for their clients. So we got to understand that and not think like, oh, I mean, unless they sat with one of us You know, I just am always assuming that what they have is probably not the best. That's not always the case, but I'm assuming it.
Right. And you have every right to assume that, because 80% of the cases, you know, that's exactly the situation. So, but anyways, regardless, we all should be telling ourselves that we are the best in life insurance agents out there that can possibly help our clients. There's nobody else that's better than Gabe, Jorge, Abel. Who else is here? Justin, Erica, Ray. So you all should tell that yourself. Otherwise, you're not gonna, how do you really believe in yourself and present yourself as a professional? That's exactly what I would tell myself all the time.